Hello and welcome everyone to Silver Asset of the Day for the 9th of July 2021, presented by myself, Phil Carr, at the Gold and Silver Club. So as we get towards the end of this week, what do you need to be aware of right now? Well, in the last week, we have seen hedge funds and money managers increase their overall net long position on silver by 2%, which does bring the overall position to 70%. What that means is, from hedge funds and money managers that do have a position on silver, 70% are long. Now, over the last week, the gold to silver ratio has broken out to the upside, currently trading above 69 to 1, which in the short term favors gold over silver. As you know, we talked you through a great trade setup last week with gold for a buy at 1,750 US dollars per ounce, anticipating a breakout towards 1,800, where many of the retail market, many of the technical traders were getting ultra bearish to the downside. All of that played out. In fact, at the beginning of this week, we were able to lock in 1,900 points on gold and platinum at the start of the week with our clients at the Gold and Silver Club. So of course, for every one lot contract that you would be trading, that's $19,000 of profit. For every 10 lot contract that you would be trading, that's $190,000 of profit. Just in a matter of 1 week, everything we essentially discussed with you in the last week, that played out with the end of quarter profit taking last week on gold, giving you a great opportunity to buy in at 1,750 US dollars per ounce. The subsequent slingshot move we got to the upside as you moved into a new quarter towards the end of last week, Thursday the 1st of July, so the third quarter of the year, and also the Basel III regulation getting instigated in the USA last Thursday, which changes gold from a tier 3 asset to a tier 1 asset for banks. So with that, of course, we did see the bid higher for gold. We've been able to capitalize on that massively. I hope you have too. This comes back to our point that many technical traders got ultra bearish. Last week, they started to sell short into the metals, expecting much lower prices, right? Or they panic sold right at the lows. Even a 3-year-old, they can draw patterns, lines on a chart, and essentially call themselves a technical analyst, right? This is how it is. Technical analysis is the most basic form of trading you could possibly do out there. It's where everybody starts, and this as a trading process in the market is massively outdated. Technical analysis does not work. We see it day in, day out with traders out there who are continually getting chopped up because they are taught technical analysis. It is the most basic form of trading you could possibly do. It gives you no edge at all. So with that, these are the key news items that I would pay attention to throughout the rest of this month and into August as well. Next week, we have CPI data. So of course, all traders will be watching that again for a gauge of inflation, which is currently running hot right now. We've seen many commodities break out to all-time highs over the last quarter, which included copper and palladium prices. Gold and silver last month broke out also to 5-month highs. So with that, it will be a key news item next week, the CPI data. The week after that, we have the European Central Bank announcement on the Thursday, with also Christine Lagarde talking afterwards. So of course, we want to review that in terms of any changes to monetary policy. Then the following week after that, we have the FOMC statement. This potentially could be a huge market moving event. That's going to be on the last Wednesday of July. This again can cause huge moves, given that on the last FOMC statement, the Federal Reserve came out with new information that they were looking to hike interest rates twice in 2023. So with that, markets immediately reacted to that. The dollar broke out to 2-month highs, and it created a great opportunity to buy into commodities on the sell-off. And then what you want to look out for as we go into August is the Jackson Hole Symposium. This again is a chance for the Federal Reserve to realign their monetary policy moving forward and provide forward guidance for the rest of the year. Typically, the Jackson Hole Symposium at the end of August, that is used to drop major changes to monetary policy and can cause huge moves. We saw gold last year in August broke out to all-time highs in the lead up to that Jackson Hole Symposium. So with that, those are some of the key news items to be aware of. Also, what I would keep an eye on right now is the dollar index, which is currently trading at 92.40. It's towards the 2-month highs right now. What would set up for the perfect storm here at the moment for a further acceleration with silver prices would be for the dollar to roll over and the gold silver ratio to roll over as well. So gold is outperforming silver right now. We've in fact got 4 positions on gold, which we continue to manage, that we entered into the previous week on those dips where gold prices came down to 17.50. But as we continue to go throughout this month, we do still like silver for a buy between 25 to 26 US dollars per ounce as an area of accumulation, as we've stated to you before on many occasions. So I do hope that many of you were able to maximize it in the last week, especially on gold, that we identified with you step by step the big opportunity to get in before we break out towards 1800 again. And unfortunately, so many technical traders got chopped up on that move. They turned ultra bearish, they've missed out again on the move, and worse still, they got stopped out and they've essentially lost money. And we definitely do not want that for you. So with that, if you would like to join a community of successful traders, utilize the same process as the hedge funds, money managers, banks and institutions, where you will be looking at market data, intelligence, utilizing the facts, statistics in the market, understand the daily, the weekly, the monthly, the quarterly cycles in the market. Very important that you also understand capital flows, key areas of liquidity, alongside that, the intermarket correlations, the ratios, and of course, how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to learn the research-driven approach to the market, join our community of successful traders. Very simply, just click on the link below today's report in order to make an application to join our professional mentorship program.